Good morning, everyone, and welcome to Tax to the Max. I'm Lynn Nichols. This program is replacing the podcast that I've done for the past couple of years. And one of the wonderful things about it is that it can be interactive. Now, I'm seeing Anthony. Somehow, Anthony is making sure that I see him, but Anthony should just be seeing me since I'm speaking. Is that correct, Anthony? Block me out. No, don't do that. All right. There, a little background light. Well, so what we're going to do here, gang, is we're going to talk about current tax developments. So let me bring up the same sort of slideshow that we would have had in the podcast. And let's start out with those. I think the way this works, we're all in gallery view over on one side of the screen. And you should have a utility that allows you to raise your hand at the bottom of your screen. And hold on a second. Let's go back to that. At the bottom of your screen in reactions, if you're not familiar with this, if all of you will look at, just click on reactions for a moment, you'll see that there is an opportunity to raise your hand. That's a hand that looks like this, or to agree, to encourage someone, that's a thumbs up. And I believe that that is laugh till I cried. I don't think that that is sadness at all. The next emoji is amazing, which is an appropriate response in lieu of anything that might be profane. You can always say, that's amazing, all right? The heart would be for true affection. And I don't know, that looks like a root. No, that's not a rutabaga. That's a party cup over there with something. I have no idea what that's about. I just know about those first two. Raise your hand and tell us it's in agreement, and the utilities, they're in reactions if you need to find it. Okay.
Lynn, you're showing your age by calling that a rutabaga. Most of the folks on this screen here won't even know what a rutabaga is. Maybe me and you.
Yeah, but Anthony, we were on a farm, and we know what a rutabaga is. Our grandmothers grew them, put them in the garden.
That's right.
All right. Okay. So here we go with sharing the screen. Here's what's on the program this week. Frequently asked questions and more frequently asked questions. The IRS is using the FAQs as expected. And remember, they now have said that the FAQ is reliable guidance. We can rely on the FAQ. My advice to everyone is, if you're going to rely on the answer in a frequently asked question, make sure that you note the date of your research and the subject of the reliance, because the FAQs do change, as we're going to point out here in a few minutes. And if the FAQ changes from what you looked at, and the IRS has effectively pulled the rug out from under your position, you need to be able to prove that that was the position at the time you looked it up. I'm sorry, there is some sort of a time code in these slides. I got to get that out before we go too much further. Okay, next we got a pharmacy owner's appeal of a fraud conviction was denied because somebody did some sloppy work. One of the reasons his appeal was denied is that his legal team missed some details in an exhibit provided to the jury. We'll talk more about that. Foreign tax credit regulations, complexity. I want to suggest that suggests a specialty. The foreign tax credit regulations have become so unique and so complex that in a firm of any size with clients that are doing business internationally, someone in the firm needs to be the go-to person on foreign tax credits. And I'll explain more about why I think so. Another frequently asked question, this time on the child tax credit. If you're preparing Forms 1040, you have to make yourself an expert on the child tax credit. And to no surprise, I think, 7 firms that promoted the opportunity zones are now under investigation by the minority member, the minority member of House Ways and Means for possible overzealous promotion of a tax shelter. And then finally, we all need to know what provisions are expiring and when. And the Joint Committee has favored us with a list of all the tax provisions that are expiring over the next decade. We're not going to talk about the whole 10 years, though, just the first 5. All right, here we go. FAQs and more FAQs. The 2022-1 explains what to do about the exclusion for unemployment compensation if you didn't get it right in the 2020 return. 2022-2 covers the 2020 Recovery Rebate Credit, otherwise known as the 2020 stimulus payments, and there were 3 of those. And then 2022-4, the Recovery Rebate Credit for 2021, which is different. Now, each of those frequently asked questions includes a worksheet. So if you have your other facts, your other information, you can grind the numbers through the worksheet to determine whether you have some more money coming from the stimulus payment and how to ask for it. I had intended that you should see this slide more or less full screen, but apparently that's not, at least for this inaugural run, that's not a possibility. So 2022-1 updates the list of frequently asked questions on the exclusion of unemployment compensation in the 2020 return that you received in 2020. It adds a question to topic G, which is what to do if you receive a refund letter or a notice, and how to respond to the Internal Revenue Service. Then new question 10 discusses questions that relate to a married couple who do not live in a community property state, filed a joint 2020 tax return, and got a notice that the IRS corrected your return and sent you a refund. There, by the way, is no requirement to repay that amount. What the IRS has learned is that they sent money to people that weren't entitled to it and hadn't claimed it, or they got money otherwise, they got a credit otherwise. Anyway, they got too much money. There's no requirement to repay it if you got money as a result of an IRS mistake. I suppose that's good news. More frequently asked questions, let's call that -2, 28 pages, on the 2020 Recovery Rebate Credit, or the stimulus payment. This includes changes to the information for topic F, the first and second economic impact payment amounts, how to find them, and how to calculate any remaining credit. Question 4 was updated, questions 8, 9, and 10 were added, and we all should have those FAQs stored in a folder for immediate access. I'm old-fashioned. I print them off and 3-hole punch them and put them in a binder with tabs so I can actually find them with my fingers, which work pretty well. This is the original search engine. The fingers were a search engine for pages of paper, and it still works for some of us. Next, -4. Now we got 50 pages. This is on the 2021 rebate credit. It's almost twice as complicated because it takes twice as much paper. This is if you did not qualify for or did not receive the full third economic impact payment. But you may be eligible to claim a credit for what you did not receive on your 2021 return. So the FAQ is separated by topic, just like the original one. I think there are 7 or 8 topics, and it's searchable. You can get a searchable document. Every question will not require new research. Once you've been through the rapids a couple of times, you'll have the answers pretty well tucked away. You won't be into the FAQs on a regular basis. You see that what's in red here? That's the first thing above the list of the topics that are in the FAQ. Please do not call the IRS. We're busy. Do the work. 1, 2, 3, 4, 5, 6, 7, 8, 8. I said 7, so I missed it by 1. These are the topics. We should be able to find everything we need, but we are admonished, do not call the IRS about this issue. Find your own way. Next, the appeal of a tax conviction fails. And the court very carefully detailed all the reasons it did fail. One of the reasons literally knocked me out of my seat, because I've done litigation support work and I know what lawyers expect, and I know what the instructions, and I know what I have done in terms of the level of detail that I've been responsible for. So when the Third Circuit affirmed this pharmacy owner's conviction, and by the way, this guy was a bad actor. He had partners in 2 different pharmacies, and in each case, he had conspired with his partner, who had the hands on the money, to count the cash and not deposit all the cash, but bring the cash to him for splitting up between the 2 conspirators. So the pharmacy, these owners were, the term is knocking down the cash. They were knocking down their own cash. The IRS discovered the scheme and put the heat on what I think is probably the junior partner, who rolled over and gave testimony against Mr. Dessous. This happened with 2 of his partners. The scheme was exactly the same. Keep a record of the cash, but don't deposit all the cash, and don't tell the accountant about all the cash. We'll split the cash up between ourselves. Don't put any cash in the bank, or only put a token amount of cash in the bank. So the lawyers on appeal are arguing that the jury received faulty government exhibit. Exhibit 450 was supposed to contain thousands of bank records, transaction by transaction by transaction, showing the details of cash not deposited. But that exhibit was missing that detail for more than 1 year. To a lawyer, that's a fatal flaw. Could be. But those same lawyers had affirmed earlier that all exhibits in the court's possession are the exhibits that have been admitted, et cetera, et cetera. Wait a minute. If they affirmed that all the exhibits were complete and correct, who the hell was supposed to have made sure that they were complete? Someone. Probably an accountant, who couldn't imagine that all the information would not be there. Or we input all the information 2 days ago, never imagining that someone might have erased it just to form some basis for an appeal. The judge didn't buy it. The judge said, we got plenty of other evidence that this is a bad actor, that he cheated on his taxes. His co-conspirators have both testified against him. His appeal from his conviction is denied. I just couldn't resist talking about, you in litigation support, the level of detail is, it's not a matter of materiality or substantiality. It's every jot and tittle. All right. Foreign tax credit regulations. Here's a quote from the discussion: create a complicated web. This is an article by Michael Smith where he quotes several different experts. The jurisdictional nexus standard, which was in the proposed regulations, is now an attribution requirement in the final regulations. While that is precise, it creates a complicated web of statutory interactions that make it virtually impossible to administer. The attribution requirement replaced something that we all understood. Property situs nexus was an accepted standard for jurisdictional nexus. But as I read this, and if you had been following the weekly tax podcasts, you know that we've had a number of foreign tax credit regulations and other guidance projects. I think we have created a specialty we tax people are already specialists. I submit there should be a subspecialty of the foreign tax credit compliance and planning, because the regulations are all new over the past 5 years, and they're exceedingly complex. And there is consensus among some experts that they, and I love the words, create a complicated web. My term would be major headache. Extensive updates to the child tax credit and more frequently asked questions, 40 pages of them. In case you wondered what happened to the -3 FAQ back when I talked about 1, 2, and 4, this is 3. Among the provisions expiring at the end of 2021 were the ones listed here: the refundability and enhancement of the child and dependent care credit. Those are 2 different credits. Several parts of the child tax credit, that part, including a credit for 17-year-olds. So the 17-year-old is no longer eligible after 2021. The credit is no longer fully refundable, and there is no safe harbor for excess advance payments after 2021. A payment received in 2021, if it's too much, it's too much. You don't have to repay it. It costs the government more to account for the deposit than the money is worth. Go figure. Now, I'm trying to watch the right-hand side of my screen here, which is where I would see all of you that are logged in. I don't see any raised hands. I'm going to hold on a second. I want to stop sharing the screen because I want to look at the chat. Okay. So most of the comments in the chat had to do with my clumsiness with the software. Can everyone see, hear, participate to the extent you want to? If not, because I didn't have the chat up. Whitney, are we good? We got everybody calmed down?
Yeah, we're good.
Thank you. Okay. Let's get back. Let's see if we can have a big finish here. I don't want to do that. This is what I want to do. Now, are you seeing the slides? No. One moment, please. How about that? I see Whitney nodding her head. That's good. Okay. So now we get to a probe of opportunity zone investors. Congress from time to time passes legislation which creates a tax shelter. It has a lot of the attributes of tax shelters that are created by what I call the white shoe boys, the fellows who create a tax shelter that's too good to be true, and by the time you find out, they've moved on. But Congress creates these tax shelters from time to time, and they're legal. It's okay. But the promoters simply can't resist the opportunity to put a couple of special turns on them, and they can make them too good to be true, and in fact, not following the law, illegal. So we have this probe launched by an elected member of Congress. Baker Tilly, Skybridge Capital, Crescent Partners, Hatteras Sky, PTM Partners, the related group, and Shop Off Realty Investments. The only name I recognize is Baker Tilly. Who are these other people? Well, they're probably entities organized just for the purpose of marketing participation in opportunity zones, thereby protecting their owners from any bad publicity that might come if their particular turn of the opportunity zone fails. Mr. Wyden is convinced that these firms have taken advantage of what Congress intended, and so he's going to probe how the benefits were in fact realized by investors. Let's see if I can bring this back to, there we go. Okay. The Joint Committee lists expiring tax provisions. This is JCX 1 in 2022. In 2021, as we discussed earlier, significant parts of the child tax credit scheme expire. Credits for some non-business energy property expire, and credits for two-wheeled plug-in electric vehicles expire. So Harley-Davidson has stopped research on an electric motorcycle, something that your executive officer and I thought was folly to start with. We need motorcycles that go boom, 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 boom. They're a lot more fun. Who wants in a motorcycle that goes, whiz? Not me. In 2022, for planning purposes, several tax credits for biodiesel and diesel fuel mixtures expire, and a delay in designated a multi-employer plan as endangered, critical, or critical and declining is also going to expire. So you need to look to the compliance of your participation in a multi-employer plan. More expiring tax provisions, 2023, the residential energy credit, 2024, nothing yet. Although don't underestimate the Congress's ability to create some complexity for 2024. And in 2025, the much loved qualified business income deduction expires, the employer credit for paid family medical leave, the increased standard deduction for individuals, but not to worry. Before we get to 2025, there is no doubt in my mind that the political fortunes in Washington will change, the winds will blow, and the tides will change, and someone will figure out a confusion for 2025. If you see any value in this, let's continue to meet for lunch, please. Every week, Thursday at noon, this Zoom call, and we'll get it refined and work out the kinks, is going to feature current information about developments in administration and interpretation of federal and occasionally South Carolina tax law. We'll have guest experts on topics about which you express a special interest. This is not so much my program as it is yours, an opportunity to get current tax information every week. In today's world, it makes no sense to wait until the annual tax update to find out what might affect your tax clients. Do you have a question? Perhaps someone in the group can help, and we can all unmute and we can have a conversation, or you can put up a chat and I'll be happy to respond to that. Questions about topics in my opening presentation are always going to be answered in real time or in chat. If you have a question that is just too complex for the limitations that we have here, I will make sure you get an answer. I may not be able to answer every question myself, but I know where to go to get an answer. And so this is a place where you can get answers. Now, I was trying to figure out what to call this thing. Is it a forum or is it a symposium? I'm I see Chris's picture down there in the corner. He may still be with us. Chris, what should we call this? Do we need a name for it?
Oh, you've got your tax to the max, and I would just call it a gathering. Information sharing, the idea of we're better as a group.
Without a doubt.
So you've got a lot of different mechanisms to get input from experts. You have CD programs, you have Scapa Connect, where we can do that real-time Q&A. And this is just another method of getting together and sharing knowledge. And while you're here as a facilitator of that knowledge, the program only gets better if we have questions from the audience and we get input from the audience. So this is a two-way type of street.
Questions from participants. So if you would permit me to correcting you, but I hope these people are not just an audience, but rather participants. I really encourage participation. Hi, Anthony. I see you got your hand up. What's up?
Hey, Lynn, Chris and I were chatting about this morning, but we've actually had some S corporation returns and partnership returns that are ready to go, be exported and sent to the DOR and federal government. They're being accepted by the feds, but not by Department
I'm
of
sorry,
Revenue.
Anthony. I had a little confusion with my screen. Please go ahead.
Oh, let me go back and repeat.
Yes, sir, please.
Chris and I this morning were chatting a bit about S corporations, the partnership returns, and it appears though the South Carolina Department of Revenue has not yet finalized their version of the South Carolina K-1s. And I didn't know if you had any additional insight on that, because we will export a return. It'll go through for the feds, but it won't be accepted by South Carolina, or actually even transmittable to South Carolina, because I think they don't have the forms ready yet, the South Carolina K-1s yet. I didn't know if that was something particular with CCH, but I think it's DOR. I didn't know if any of the other folks on the call here had similar problems.
Okay, let's thank you, Anthony. Let's see if we can, if there's any participation on that. My own experience, I'm preparing a module, a part of Spring Splash on taxation of S corporations and their shareholders. So I certainly am going to be researching that for both federal and state. But what I do not know. Does anyone know what South Carolina revenue is going to do about S corporations? And
Drake has a similar problem, Lynn.
Is it you have a similar problem?
Yeah, Drake, the tax program Drake is apparently not getting any approvals from SCDOR either at this point.
So this is a place where Scapa can help if they can use their contacts and their influence. Maybe we could use this as a reason to get a question answered on this very important topic. The
question was sent to the DOR this morning. I don't have a response back yet. I do know that once the DOR has those forms out, it does take a significant amount of time, depending on who your provider is, to get them into their systems. So the first step is to find out if the forms are actually available. And then we actually call most of the major tax prep companies and put a bug in their ear that, it needs to be there. South Carolina being smaller as it is, we normally end up at the end of the line, but I can be a pest, so I can normally break that free. So I should have an answer on form availability probably by this afternoon, and I will run out after that and try to see if we can move it along.
Chris, would it be possible to send that out to all the participants in this program?
We do. Once we have an answer, I'll send it out on Connect.
Okay.
So it's important to be in that group on Connect, because that's where we're gonna throw that information out when it comes in.
I have a question from Lois. Is it required to pay tax at entity level, or can we keep using, this is I-385, to pay at individual level for lower rate? That That's a South Carolina question.
And we'll get an answer to that one too.
Okay. So, Natalie, thank you for your contribution. The state form is always dragged into February. And so her firm at least relied on their software provider and didn't really fret about it until they got the software. This, of course, is not any help with the client who is pestering you for numbers. They want the numbers now. They want to know what they're going to owe. So, and I'm going to need some technical help. I have a green screen behind me, and it makes something about my setup. I work in natural light, makes my skin appear very ruddy, very red. I'm not that red. I'm not sunburned. I want to look like Chris. He's this handsome devil here, but he just has a picture of. Maybe that's what I should do.
Photoshop does wonders.
Folks, I am excited to participate in this new delivery mechanism. I hope that you will all feel free to offer ideas. Criticism, no problem. Ideas to make it better, wonderful. Questions, things that you think we should talk about, we don't, no problem. I am committed to making this an important part of your week every Thursday at noon. We will make it technically better. Catherine is going to be responsible for making sure that we can all get on, get off, see the screen, unmute. Right, Catherine? Or Whitney. That's it. That's it for today. Thanks. Bye-bye, everyone.